All right. Thank you, everyone. Thank you to the panelists. And if you wanted to put together a panel about blockchain and payments and accessibility, it'd be harder to get a better group of speakers. So I'm really glad that they could join, and really glad that you're here. We only have 25 minutes, so I'm going to get right down to it. We're going to go down and do a quick round of introductions, about a minute, 2 minutes, with particularly focused on, we're all from payments, traditional payments, and have got into blockchain. So myself, Sanjib, Kalita, I used to work at Citibank in credit cards for many years, then helped build a couple of startups, including Money 2020, and now I'm building a credit bureau built on blockchain technology. So Sonny?
Sure, I'm Sonny Singh. I'm the Chief Commercial Officer of BitPay. BitPay is the largest processor of Bitcoin in the world. So we processed around $1.3 billion last year in payments. So people were actually spending Bitcoin around the world, not just trading it all day. Some of our customers include Microsoft, Newegg. So it's expanding a lot, Bitcoin, even though people might not spend it themselves. It's actually happening fast around the world.
Jonas?
Hi, everybody. I'm Jonas Edgeworth. I'm the CTO of Veem, and we focus on global payments for small to medium-sized businesses. My background, worked at Goldman for around 10 years, focused on algorithmic trading for the rates desk, closely aligned to the FX desk. Last company was in InfoSec, and also had experience focused on small business e-commerce. So the space was perfect for me, and then blockchain just added to the excitement of the opportunity.
Riddhiman Das. I'm with Ant Financial. Ant Financial operates Alipay, which is the largest payment platform in China. We have 850 million users in China, India, and Southeast and East Asian countries. Prior to Ant Financial, I was part of the original team at iVerify. iVerify was a biometric modality where we looked at people's eyes and authenticated them, and we sold that to Ant, and it was used as a way for financial inclusion, to allow the 2 billion people in the world that do not have bank accounts today to participate in the digital economy.
Okay, thank you. So let me start off with asking Sonny a question. You know, you're at BitPay, you're sort of one of the OGs of payments and in blockchain and Bitcoin specifically. So you've been there a while, so you've had the benefit of sort of a long history, as well as being a leading processor, sort of the breadth as well too. Can you comment a little bit about the evolution and how things have been going and sort of where we're at this point from the consumer side?
Yeah, so I've been at BitPay almost 5 years now, and BitPay's been around for 8 years. So when we first started processing Bitcoin in 2011, we'd probably end up processing maybe $20 million for the year. And we were starting with little small restaurants back in 2011. And then in 2014, 2015, we got to really the large e-commerce companies like Microsoft and Newegg and Zynga, even Warner Brothers, Virgin Galactic started offering tickets to outer space. So that was really exciting.
Jonas,
yeah.
I guess looking at sort of the B2B payment side of things, Veem has done a great job starting from within the last few years, and followed on some of what's happened in consumer into the B2B side. What's been your experience with Veem?
Yeah, just I think it's interesting to contrast the two, really focusing on consumer and then the B2B side. And really it comes down to speed, simplicity, and price. And so if we're looking at speed, most users don't really care when the actual money lands in their bank for the most part. If you get a check, it might clear a day, 2 days, 3 days later. Whereas if we're contrasting that with the business side, there's a cash crunch. Small businesses do not have a lot of money, and they really have to manage their liquidity well. So the more that we can actually shrink settlement times by a day, 2 days, 3 days, it makes a huge difference. In terms of simplicity, simplicity is also really important, but it's a very different type of simplicity. So most consumers know the Venmo experience. They enter, some minor details about the person they're sending money to, the amount, and they hit go. Whereas on the small business side, you're typically dealing with an accountant. And simplicity to them is simply interfacing with their own business processes with the least friction at all, as possible. So for us, that simply means let's get out of the way, push blockchain out of sight, out of mind, and just really focus on the core value, which is moving money from A to B.
Okay. That makes sense. Sonny.
Yeah, sorry. So, 4 years ago, we started out getting the Microsofts of the world and e-commerce companies. And then last year, we noticed a very interesting shift, which was large law firms, software vendors, real estate companies started contacting us to accept Bitcoin. And the reason why is all their crypto clients started demanding that they pay in Bitcoin their monthly bills. And so we didn't see that coming, and so we started onboarding all these clients now. And all these crypto companies, so all you guys in the crowd that have crypto companies, you're sitting on Bitcoin on your balance sheet. You can tell your Rackspace or Amazon or whoever your software vendors are that you want to pay them in Bitcoin, and they'll actually contact us, and they all do it. So a lot of the law firms are all doing it now, doing $100,000 retainers a month in Bitcoin. And then the funny part is, they're not announcing it though. They're still afraid to announce that they accept Bitcoin, these law firms, but they all accept it for the clients, but they won't publicly admit it yet. And that's slowly changing, but it's on our part as the industry to start eating our own dog food and demanding we pay these bills in Bitcoin. And I've seen a great shift happen quite a bit. And BitPay, we process, maybe 50 million a month now in these types of payments, actually.
Wow. Das, you've heard from leaders in consumer and B2B payments, Bitcoin blockchain payments in the U.S. You've probably got more of an international view from where you sit. How would you contrast what you've heard from them with what you've seen, outside of the U.S.?
Sure. So I've had the privilege of looking at the payment ecosystems in China, India, and Southeast Asian countries like Philippines and Indonesia and Thailand. And what we've seen is, from the regulator's perspective, we hate crypto perspective. And from the consumer's perspective, there is a little bit of, this is interesting, we want to try this out, and how would this help, right? And the approach we're taking to this is, we're not directly investing in crypto, we're not hosting nodes, but we do have a blockchain implementation. And what it powers today is, you guys might have seen the announcement about a month ago, is remittances between each of these wallets, right? So a Philippine user of an Alipay affiliated wallet can send money to their Chinese Alipay wallet or someone in China and their Alipay wallet, and that payment is, that remittance is powered by the blockchain, right? And the benefit we get here is, again, the intermediaries that we strip out of the process, right? It's faster, it's cheaper, and it's more reliable.
Okay, great. I think we're at an interesting point in the industry in terms of blockchain for payments. It's something that is a concept that has been around, for several years, and it's starting to gain more view, and you might get sort of, your grandmother's asking you, what do you, they might actually understand what you're talking about. Where do you see things going in the next year or two? And I'll start with you, Sonny.
Yeah, so I think we're in an interesting cycle. I think we're in a 3-phase cycle, and I kind of call it the HRA. So cycle 1 was the hype cycle, which was last year, and that was, you saw the media frenzy happening, and every time Goldman Sachs would say something about Bitcoin, the price would go up. And then this year, you're starting to see the reality now, kind of realization. No longer does hype move the price of Bitcoin and move the needle anymore. People want to see real results. And what you're seeing is companies like Fidelity, Square, they're all kind of going behind the scenes now and actually working on products. They've realized this industry is no longer a fad. When companies like Binance forecast to do $1 billion in profits this year, that gets real-world attention. This is not a fad. So now the traditional incumbents are saying, how do we catch up to these companies? So next year is kind of the A cycle, which is acceptance. That's kind of mainstream adoption, where companies like Fidelity will launch a trading platform, a custodian service. E-Trade might launch a product to compete with Robinhood now. Square might accept merchant processing via Bitcoin, and that's going to become mainstream. So I expect next year you're going to see very large growth in user adoption amongst Bitcoin for real-world practical use cases.
Okay, great. Jonas?
Yeah, my view is primarily more around blockchain than a particular token or currency. But it's really about the incumbents finally feeling comfortable. I think we've crossed the chasm. I think people in, I would say, traditional businesses are looking to invest. And I definitely see a view towards market consolidation to the point that we'll actually start to see walled gardens where effectively there is an internal economy. And so if we talk about Alibaba, where there's incentives to keep the money within that particular economy and effectively penalties for pulling that money out of that economy. And so in the US, the elephant in the room that I think is a big player, they rhyme with Amazon, will likely make a play. I see a lot of disparate services, and I believe they'll put together a true ecosystem.
I think we're going to start seeing the blockchain being used as a real inter-organizational database, right? Where the two entities may not necessarily have a lot of trust in each other. Or they may do, but they may not have trust in the underlying fundamental technologies that make it work. What that means probably is the emergence of cross-chain protocols, side chains, and things that can interact between blockchains, right? Our hypothesis is that no one chain will win out in terms of where transactions occur and where data is recorded and what serves as a source of truth. So you're going to start to see the emergence of these cross-chain protocols that allow for facts recorded in one chain to be represented on the other chain and being used in smart contracts and interactive things of the like.
Oh, great. Yeah. So a lot of times, thank you for all those perspectives. And a lot of times when you're working with a new technology, sort of incumbents might make comments like that this is just a problem looking, it's just a technology looking for, a solution. There's really no good fit there. Between speed, convenience, and cost, or other elements of value proposition, like what do you see as the key that blockchain brings to the table in terms of payments, and and what might be the dynamics of that?
Yeah, I think the blockchain phenomenon was, blockchain for banks, blockchain for sneakers, blockchain for everything a couple years ago was very hot. And now it's went from crypto to blockchain, back to crypto again. We'll see what happens next. I think the one problem with a lot of these blockchain projects is there's not really revenue attached to it. Again, as I mentioned before, when in the Bitcoin world now on these exchanges, you're seeing billion-dollar profits. That's making traditional incumbents have to move fast because they want a piece of that action too. In the blockchain world, you're still seeing on a theoretical level, the pilot level, it's not driving the real revenue yet per se, so everyone's still got it in POC, science labs, and all that. And right now, it's really a mad scramble. I mean, Square's market cap has almost doubled in the last 6 months because they started talking about Bitcoin. Now, whether or not that's valued or not the right way, it means they need to start coming out with Bitcoin solutions fast to justify the market cap valuation that's increased so much. So real-world money now is chasing these real-world problems, and we'll see how it turns out, where a lot of the blockchain experiments are still just experiments, and I think they're exciting, and I'm looking forward to a lot of them, but I think they're still going to be delayed a little time.
Okay, great.
Yeah, my view is really it's about best execution, right? So getting the best price for your FX, and then how quickly you can settle. And that's really the enabler. Whether that pipe is through fiat or whether it is in any flavor of cryptocurrency, what it does do is it provides variety, it provides additional liquidity, and hopefully that will actually drive down prices.
Yeah, you have to solve a real pain point, and you're just choosing whichever product solves that pain point is the real one.
Exactly. We're agnostic and pragmatic.
I'm with Jonas in that, especially in the remittance use case, which is where we've deployed the blockchain today, getting the best exchange rate, getting your money on the other side faster, and cutting down on transaction fees, essentially making it free, is a huge benefit to the user, right? Yes. And I often hear this in being said about blockchain is that it's a technology looking for a killer app, right? And what I'm intrigued by is to see, does that killer app happen in finance and payments, or is it going to be something totally different that that is going to take us by surprise. And it's very likely that some of these use cases that we're describing are really the killer apps.
Okay, that makes sense. So actually, Sonny, you've done a tremendous job just building from the business side of building a consumer blockchain payments business. Do you have a question for Jonas as far as like who's looking at it more from a technology and a B2B side?
Yeah, a couple of things. Is A, how do you determine what countries to target? And then B, how do you determine which rails how do you determine the best pricing for what rails to use? And then also the compliance. Do you have to have compliance and regulations for each one of those countries too? So kind of three loaded questions.
Yeah, it's a lot, and you really kind of have to build a multi-dimensional matrix for your decisioning. So, in an ideal world, it acts the same way you would think about the problem if you were an algorithmic trader at Goldman, right? So you're receiving market data in from multiple sources. It may be for a fiat currency or a cryptocurrency. You're building an internal order book, and then based on that, based on the payment that needs to be made, baking in the fees, you execute. And so you hit the bid. From there, you've got your FX, and you can keep going. Now, the choices are challenging because for us, we have to look at supply chains. We look at where is global trade. Is that going to be the source that we actually use for demand gen? And then that helps us to be able to create liquidity on the platform to incentivize our users. Regulations do play into it. That's typically how we end up having to pull the plug because there might be something that's too stringent for us or we will not meet various risk demands or capital demands. But for the most part, working with large banking partners, it's worked out pretty well.
Okay, great. And Jonas, you've had a predominantly enterprise view on things. Do you have a question for Das, who's worked for the leading mobile payments provider?
Yeah, I'm curious, like from a remittance perspective, you described a little bit about what's actually happening in terms of the wallets on each side. How would you see that applying to a small business owner? And do you see that if there's any incentives there, or?
Sure. So one of the lenses I'd like to view the world as is when they digitized, right? In the United States, for example, we've had digital tools for decades now. China's kind of in this interesting position where they caught the mobile wave, and the first time a lot of these businesses came online was on mobile, right? Hence we see mobile payments proliferate and gain acceptance there. One of the products of ours that's found a lot of traction in small to medium enterprises is called Koubei. Koubei is this suite of products for a small business to automate everything from their sales and accounting and keep records of inventory to accept payments and make inter-organizational payments as well, right? And so from a mobility perspective, I see users being able to roam easily between wallets without necessarily having to create new wallets and get new foreign exchange and all of that. For example, someone from the Philippines who's visiting China should be able to transact in China with their Philippine wallet at Alipay locations as easily as they do in the Philippines, right? What we're also seeing is the emergence of universal QR code payments in Asia, right? Where there is it's almost like in some countries with QR codes, the QR codes are tied to that vendor. There's a WeChat QR code, there's a Alipay QR code. What we're seeing emerge is these universal QR codes that you can use any payments technology towards, right? And it's sort of like this universal card swiping machine. And so I think we'll see use cases like that being powered by the blockchain where it doesn't necessarily matter what kind of wallet you have. As long as you can consume a QR code, you can make a payment.
Okay, great. Thank you. And Das, you're on this panel. I think you're the newest to this space.
Sure.
And Sonny's had the most in-depth experience in this space. Do you have any questions for him?
Sure. So as you look at the world of blockchain and payments today, right, we see a lot of different approaches. We see private blockchains with their own token attached. We see public blockchains. We see implementations like ours that are private but don't have a token attached to it. As you look at the next 2 years, where do you see the world headed? Is it more towards the private blockchains with a token?
It's tricky to say. I want to lean more towards the public side, actually, but I'm not really an expert on that.
Sure.
What I am going to say, what I've seen so far in the Bitcoin blockchain space is everything's regionalized. It's not one size fits all. So, for example, everyone says, well, I don't need Bitcoin in America. Who uses Bitcoin around the world? Well, people in America have a different financial situation than people in Argentina. So at BitPay, we get part of our salary in Bitcoin. So I say part of my salary every month in Bitcoin. We have a development team in Argentina. Guess what? They take 100% of the salary in Bitcoin because not that they think Bitcoin's going to go up, but they think the Argentine peso is going to go down. And it's worked out quite well for them in the last 3 years. Also, people in Argentina might not have credit cards, so Bitcoin fills that need. Bitcoin's great for remittance and cross-border in Asia. It's great for B2B, that people for large tickets where it's cheaper and quicker than a credit card. People in America don't really see that need yet or value, so it's all regionalized what your use case is for Bitcoin and blockchain. That's kind of what I see going forward.
Okay. One of the topics in the headline of this panel was accessibility. You know, Das, what do you see as some of the biggest obstacles to accessibility, and what, you know, how might you see,
Sure.
you know, the reaction to that?
I think one of the big obstacles is the lack of education, right? That people don't understand why you trust in crypto, right? And as we develop consensus as a community, as a world, around the fact that we can really trust cryptography to keep your secrets safe, I think we'll start to have some really cool applications built on top of that. For example, we can bring on board 2 billion people in the world today that have never had a bank account, right? And bring financial services to them, not just a bank account, but also loans and credit services and everything on top of that.
Okay, great. Jonas?
For me, the biggest obstacle is identity. You know, there are a lot of vendors in the other room. You know, if you're thinking about kind of the payment ecosystem, whether it's remittance companies, payment processors, exchanges, banks, all of them have KYC processes. And if you think about each of these as a network, and the network effects of making a payment, you start to have to apply Metcalfe's law, which is really effectively n squared the size of the number of nodes in the network, right? And so this becomes very taxing because each and every single one of our these instances of providers has to go through the same KYC process for each, you know, each company, and it might be the same company. So I'd really love to see someone solve this problem such that we can come up with a common definition of what it means to KYC a particular company, potentially with some signatures and a published set of rules saying, hey, this is how I KYC, and my signature validates that I was the company that KYC'd. That might provide trust to an exchange or a payment provider to believe in my KYC process and therefore believe that this company has already been KYC'd. Okay. So huge opportunity if somebody wants to go do it.
Yeah. The amazing part about blockchain is it's truly global, and yet no one runs blockchain. There was no chief marketing officer of blockchain who ran a marketing campaign around the world to make it as well known as Google, Facebook, or Apple, or IBM. I mean, it's amazing the brand exposure. People in Nigeria, Argentina, India, they're all talking about it, they all know about it, and yet it happened virally. That is truly amazing. The other thing is that's amazing, it spreads so fast, so quickly, is that nothing moves fast in fintech. And this thing is moving at light speed actually now. Merchants are using it, customers are trying it out, big brands are using blockchain for every different reason under the sun. It truly has become a phenomenon that happened on its own.
Okay, great. Well, thank you. And unfortunately, our time's up, and I want to thank all my panelists, and I want to thank you, the audience, for listening to us. Thank you.
Thank you, Sanjib.
Thank you.